Good morning, everyone, and welcome. It's Ken and Paul here once again with the Sirius Report podcast. And today we are going to look into a little bit of gold and silver. Now, for those who have listened to our podcasts on different platforms in the past, we've talked extensively on gold and silver, what it truly is, and all the pros and cons in regards to the way Wall Street, individuals, the East, the West treats gold and silver. But the reality is that gold and silver are going to play a functional role, just as it's done throughout all of history going forward. But the true thing is getting an understanding of what gold and silver represent. And with that, I'm going to go ahead and start and pass on and welcome Paul and welcome to the podcast.
Yeah, and likewise, Ken, it's always a pleasure when we do things together. Well, I mean, where'd you start with this? I think, obviously, we're going to, because we effectively will treat this as a new audience, so we're going to do things rather differently. I think what we can do is start at the beginning. And really, in essence, I mean, and gold is money. To some extent, silver is historically, it certainly has been. It can also be treated as an investment, and it has industrial application. But I mean, everyone can buy gold and silver and trade it if they want. It's up to them. This is not a investment guide. We are not offering investment advice in any way, shape, or form. But for some people, buying gold and silver can be, well, I've made 10, 20%. Okay, you're going to get hit with obviously premiums you pay and obviously VAT, etc. in the respect of silver. It depends on the jurisdiction you're in. I mean, in some jurisdictions you don't pay VAT on gold, some you do. So if you can make a profit and someone's prepared to buy your gold back off you, physical gold, then that's your choice. I mean, it's up to you if you want to do that. Also, some people will think they've bought physical gold and silver, but they have what they believe to be an exposure to it. That's not necessarily the case, and it's a lot easier for them to trade it now to make a profit. Now, I have no problems with people doing that. In fact, quite the contrary. But from my perspective, and I'm sure I can speak for Ken as well, gold is not an investment. For me, it is not to try and make a fiat profit. Because my perspective on owning gold is we're in an unprecedented period in history, and to prepare to deal with all future eventualities, I would buy gold on the basis of protecting myself. So I'm effectively protecting the money I have by putting it in what I constitute real money and not fiat, with a view that whatever happens in the future, I will be able to have purchasing power in holding that gold. And I'll give an example, and I've done this before, but I think it illustrates a point. So the figures don't mean anything. I'm just saying it to keep the maths simple. Let's say gold is currently $2,500 an ounce, and you want to buy a property. Well, let's keep it simple, $250,000. Okay. So therefore, on that basis, you would need 100 ounces of gold currently. Now, in the world of financialization, all financial assets are massively overpriced. They bear no resemblance to reality because they've created all these asset bubbles, including in property. So there is a legitimate argument, and I'm just, again, doing this to illustrate a point. Let's say property prices are 50% overvalued, and that's not an unrealistic suggestion, given we saw in Japan property prices fall 90%. But let's say in reality, a $250,000 home should be priced at $125,000. And then if we argue, and people will speculate, and this is often what sucks people in to think, oh, I can make some fiat profit, is because I'm going to buy gold at current prices or a lot cheaper. And I'm hearing they're going to reset the gold price to X, Y, and Z. And therefore they think I can cash out and make fiat profit. Now, okay, that's your choice. That's your choice. But for me, the time to cash out of holding gold is when we have stability in the economy, stability in the financial system, when assets are fairly priced, not in massive bubbles. So if we say the house is now $125,000 and gold gets repriced, and I'm just doing this to keep the math simple, I'm not suggesting this will be the future gold price, because at the end of the day, the future gold price should be based on meeting market demand, but also based on any future mechanism that gold could be utilized to back currencies, etc. There are people who say that's never going to happen. Well, there's already enough noises coming out of the global south that will happen. To what extent it happens, there is no decision being made. I have to emphasize that there are people claiming to know things. There is no decision made. But let's just say in current dollar terms, to make the math simple, gold was $12,500 an ounce. That's just to make the math simple for me. Then, instead of paying 200 ounces of gold to buy this house, I can buy it for 10 ounces based on the future price and the future price of a house. Now, that's purchasing power. That's why I think gold's an investment. Now, you can argue silver could be, but silver's an industrial metal. Therefore, its supply and demand will in the future reflect reality. And this is in part based on the fact there is enormous physical buying being going on in recent years, not exclusively, but by the Chinese and obviously India. So, so it's a slightly different mechanism for buying it, but historically silver has backed currencies. So it may do so in the future in certain capacities. I think that's less likely, but it certainly can be treated also as an investment, but also as a form of money, and is complementary to gold. There are a lot of cynical comments that it's a poor man's gold, etc. Well, they're just statements which I don't attribute to reality. But I think for me, that was the first point I want to make. And it's a very important distinction. And it's not investment advice, it's just an observation of how we should perceive gold, particularly in this case, rather than the perception I think a lot of people have as to what gold is in their mind.
Exactly. And, I'll be honest, myself, I really didn't understand the totality of gold and silver being money when I first started out this. Back in 2007, before the financial collapse, I had received certain windfall from some business transactions, and I bought some gold and silver. But what I also did was treated it as an investment while also going out and doing Forex trading. And the Forex trading platform I had, you could do gold and silver versus the dollar. So I was treating it as a way to make money. Many ways, the same way people are using cryptocurrencies or other assets, equities, bonds, etc. But it wasn't until after the financial crisis and the Dodd-Frank bill that was passed that made where the banks could then take your deposits in rehypothecation, that I started looking deeper into what gold and silver really represent. And that led me to go back to the time when we were on a silver standard in our currency, when gold was more of an international held trade following the 1933 nationalization by FDR. And when we had silver in our as our currency, as our money, inflation was held relatively low until the 1960s, when they decided to expand the monetary supply for the Vietnam War and for the Great Society and the welfare state. But everything was relatively priced stable when we were on a silver standard. And just an example of this, in 1960, a gallon of gas was 30 cents, 3 silver dimes. Well, a silver dime today is just a single silver dime is $2.05. So that means that those three dimes, if you still had them, are worth about $6.15. Well, how much is a gallon of gas? Gallon of gas is relative between, say, 310 and 375. So not only did you, by holding that silver, are you able to buy the same goods today, but you also have improved your purchasing power because you can almost get 2 gallons of gas for what you could in 1960. So these are the things that understanding that gold and silver, while silver, yes, is an industrial metal, they are money and they're wealth protection, and they should be treated in that capacity rather than the speculation that, oh, the price of gold and silver is going to go sky high. And that's what you're really trying to do. No, if you want to speculate, there are other asset classes to speculate in. But in the meantime, if you have savings and you're waiting to use those savings to buy other assets or to buy other speculations, the best thing to do is hold it in gold and silver while it's in savings, because you protect your wealth and you also improve your wealth in comparison to the declining fiat currencies.
Yeah, exactly. And I think, to take this on a point, is there is an awful lot of people out there constantly drawing charts and saying TA indicates this, and this is a resistance point, this is a support point, and you should buy accordingly. Well, be extremely careful what their real intentions are, because they might be just traders who are looking for other people and they think they can get people to momentum trade. I don't understand why they believe that they have the capability to shift the price themselves, but clearly they do. And okay, if that's what they want to do, fine, but it is not a reason on that basis to buy physical metal, from my perspective. It is a reason, and it's fine, as I said, if people want to trade paper, and that's their prerogative, but don't be fooled by people claiming that somehow this is a buying position and then people go out and buy physical metal accordingly. The other point I think is worth making is this whole thing to do with retail and wholesale, because a lot of people say to me, oh, nobody's buying metal, nobody's buying gold because I can go and buy whatever I want from my retail bullion dealer. Well, retail is a drop in the ocean compared to wholesale. Wholesale's where enormous tonnage shifts hands, and wholesales also has a transparent and opaque market. Now, a lot of the data you'll see where country X has bought X tons this month is in the transparent market, but that, believe it or not, is dwarfed by what I've termed for a long time the opaque market. Now, not many people in the world have any understanding of the opaque market. Fortuitously, I do, and I have done for quite a long time, because I know people who operated, or sadly one or two have passed on, but there are still people in those markets who were enormous tonnage chains, and no one has any understanding of this. There is nowhere that it's recorded. There's no data, but that's where the ocean for me exists. The rest of it's small change, and that ultimately is the driving force, not for the price, but for the physical reallocation of gold and silver. But let's just focus on gold for now, from west to east. Now, I've said this before publicly, but we'll say it again for anyone who hasn't heard. Back around 2012, for a period of 30 months, 1,000 metric tons of gold went from west to east. There was no record of this whatsoever. That's 30,000 tons. And when I say east, it went to Hong Kong and to China. A lot of that gold never left China. It's there still. And rather like China's market, where all the physical gold they produce never leaves, they actually produce 600 metric tons or so a year. So when I've consistently said China has about 40,000 tons, they do. Russia has enormous tonnage as well. A lot of that dates back, going back to the Tsar era. And it's why at one time Yeltsin, for as much as he was decried and disliked and detested and despised, he one time made the statement, I am here to protect Russia's real assets. They can steal the assets they think matter, but my successor, will take them all back. His successor happens to turn out to be Putin, and that's precisely what he did. So the real assets, things like gold, they have enormous gold reserves, huge. So Russia's about the same as China. Difficult to understand. Iran has massive gold reserves. No one knows about it. And so do probably a whole bunch of other countries. Now, I know people go, well, the maths doesn't add up. Well, the maths doesn't have to add up because, again, this is official data that people rely on to get an understanding of the market. Now, I'm not saying the official data is wrong. It's just an incomplete picture. And this is why, this idea of all this gold moving from west to east is a reality. And I've said for over a decade, you would only ever see true price discovery in the West when effectively it was drained of gold. And we can arguably say to do with silver as well. But the question is, when was this going to happen? I always kept saying you will start to see it happen. And I mentioned quite a few years ago about the arbitrage between the West and East, particularly China. We've certainly seen that in the last 6-12 months. I no doubt it's buoyed the price in dollar terms, and I'm just using that to illustrate a point. People ask me, half the time I don't know what the price is in dollar terms. I'm not interested. It doesn't interest me whatsoever. But one point I do want to make with regards to this whole shifting from west to east, there comes a point, and there's been an argument in recent times that we could be reaching that point. There is signs of it, but it's not definitive. And people will point to the fact that gold and silver keeps being smashed on. But gold, despite all attempts, and this has been going on for 2 years since they raised interest rates, because the expectation in raising interest rates in the US was gold now would be at $1,200 an ounce. Just looks at the tips data, that gives you the indication. Why is gold at $24.60 the last I looked today, almost at a record high in dollar terms? Despite every effort to do so, it's not succeeded precisely because of this drain of metal going from west to east. It's an ongoing process. There comes a point when the West doesn't mean there's no gold in the West. It's just, it gets to the point where the paper market becomes unsustainable, because if the ratio between whatever physical they have in the West and the amount of paper becomes so huge, there is always a risk, given what might happen in certain geopolitical reasons, economic, financial reasons, there might suddenly be a big run and everybody wants their gold. Well, if the ratio is so huge between paper and physical, they're not going to be able to do it. Then they risk force majeure. Then they're in serious trouble. So this is why, in many senses, despite the fact we see prices move and fluctuate and there's been a lot of volatility, and I've said to expect volatility on my own podcast. I've said it in tweets. This is normal. Their prices stayed very, very stable, and despite all those efforts, and it's, as I said, for the reasons I've just stated. So these are important considerations, but that day is coming, and to some extent it may have already happened. It's not something you can immediately see, but there will come a point when it will become very, very obvious that's the case. But at the end of the day, I don't know what the price of gold will be in the future, how it's repriced, what happens, and I'm not interested. I'm interested when I get purchasing power with it, when I can buy real assets that reflect the new financial world, a world that isn't dominated by fiat speculation, by financialization. With silver, it's different because the industrial demand is huge, and it will continue to be, and that makes managing the silver markets in the West far more problematic, because they have to deal with not just people investment buying, and that's happened in, ironically, China and India. People are buying silver as investment, which is not common by any stretch of the imagination. So these are all very interesting developments that are ongoing. But I also want to make a point when people talk about buying gold, and they go, well, gold and silver is going to fall to this price, or gold and silver is going to rise to this price, and you shouldn't buy now and you should buy then. And my argument to them is, we live in unprecedented time. So I'm not saying it happens, but if tomorrow the Iranians shut the Straits of Hormuz, what do people think is going to happen? You trying to speculate and predict prices may work in a stable, normal world. Well, we don't live in that. The West is economically in serious trouble, financially in serious trouble. There's all the geopolitics. There's all the things going on between Iran, Israel, and Hamas and Hezbollah. There's the Ukraine war. And there's also, the ongoing problem of what happens to the Western financial system. And if you add all these and a whole bunch of other factors, you can't really sit there and accurately predict, because someone might go, well, I think the price of gold is going to fall and everyone should short it. And if they'll be potentially wiped out if tomorrow they did say they're shutting the Straits of Hormuz. That's the predicament you find in. So again, it's not investment advice. I'm not telling people what to do. It's your choice. But be very careful in people pinning prices as this is a time to enter and exit, and then question why they're saying it, and ask them why they're saying it, and have they considered the ramifications in this world of huge uncertainty. And just because there's huge uncertainty doesn't mean you just buy stuff and think, well, it doesn't matter because ultimately it's going to go to some price that someone else has told me. So I'm trying to be objective. It's not all criticizing people shorting things. There's also people going long, question their motivation and why they're doing it, and don't get sucked into sensationalistic headlines. And it's why, for Ken and I, we've been completely accurate in predicting what's happening in markets, including the steps of arbitrage between the West and the East, because we're objective. Yes, I am, I do own gold and silver. Well, that's a statement of fact. But I don't go around pushing prices. I never tell people to invest in it, because we're not here to give investment advice. We're not allowed to, and we have to make that explicitly clear. But in doing so, I feel we have to have responsibility in what we talk about. And that's why we have to be, very guarded in how we say things. But what we can say is we understand the opaque markets in gold and silver, and that's where, for me, the interest lies. The other is interesting, but it doesn't always reflect reality. So, for example, institutional investors in the West don't seem to be buying, but there are institutional investors who deal in opaque markets. They are buying. The institutional interest in the rest of the world is significant. We certainly see examples of even Western countries like Poland buying gold, and they continue to buy gold. I mean, yes, some central banks are buying gold, some are selling gold, depending on the current situation where they need at times to be able to have to sell gold, because they, that's the only way to balance their books effectively. So it works both ways. But at the end of the day, in terms of the opaque markets, what I can say is there are countries buying gold. They're not publicly announcing it. And China's a great example. So when I see people say China's no longer buying gold, as though this is a big downer, somehow China's going to start dumping gold, China's not interested in gold, all these stories, not true. No, China sometimes will just go and buy in opaque markets and not tell the world anything. China might be conducting gold trades with the Russians, as they quite often do, and they don't report it. And why should they? They don't have to report anything. They're not obliged to do so, but at times they will do so and tell people that, and release official figures, but official figures are just part of that far broader equation. I don't doubt as well there are institutions and sometimes countries who will sell gold and not report it either. I mean, so again, to be objective, it works both ways, but there are important distinctions that need to be made, because I feel at times people have gone invested in gold and so bought in it as an investment, got really fed up with it because they probably shouldn't have bought in the first place. They didn't really understand what they were buying. And yes, there has been paper manipulation in the West. It's absolutely irrefutable. We know it, but equally, just because prices fall in the West doesn't always mean it's price manipulation, because sometimes, like when we saw the equity markets getting slammed because, I mean, was it the yen carry trade or was it the US employment data? It doesn't matter. But equities, what's happening? The reason is because there's margin calls, and people often in these situations, when they dump equities, the paper price gets slammed as well. And it's a reflection of marginal. It's not some dodgy shenanigans going on with someone pumping fake paper contracts into the market. But always remember one thing with regards to any spot price in the West: how does it accurately reflect physical metal? It can't. How does it know who's buying? Does it physical metal? How does it know, even at the retail level, who's buying and selling, what's going on? They don't have visibility on it. So, of course, it works in a subset of the market, which can be very frustrating. But at the end of the day, like all Western markets, at some point, financialization will give way to financial reality, where assets will be priced accordingly, whatever that might be. And okay, not everyone can hang on until that time or wants to, and that's fine. That's, again, everyone's individual choice. But I think it's extremely important for people to understand better what the markets are like, what they're investing in, and then they can make an informed decision and go talk to financial advisors, go and talk to people who can give you investment advice as well. We're just trying to point out some broader aspects of the markets that I think are important.
Absolutely. And, you know, in the past, I probably have been guilty of this, and many people. We love to talk about the unique, sensationalist occurrences in history where having gold and silver has been pretty much, you know, put somebody in the catbird seat. We go back to Weimar, Germany, and the story of the bellhop at a hotel who was given during the good times a gold coin as a tip. Well, a few years later, when hyperinflation hit, he used that gold coin to buy the hotel or buy an entire city block. In Venezuela, early on in Maduro's reign, when hyperinflation was kicking in, people were using gold and silver to buy homes and buy food and buy all these assets because that was the only really trusted currency. Well, the reality is that those are unique situations in history that may or may not come about in the location that you live. However, take a look at what governments are doing, because they're the ones who have the inside knowledge on where the future's headed. There's a lot of talk about the East, the BRICS, the multipolar world, eventually moving to a currency that's going to be asset based, whether it's gold, silver, oil, other commodities, certain percentages, maybe 20%, maybe 40%, who knows? But the reality is you do not collect high levels, high volumes of gold unless you're going to use it for a purpose. There's one thing transferring out of treasuries into gold as a means to diversify your reserves. There's another thing where you're going out and trying to corner the market in the West and move it all to the East. There's a purpose behind that. Then take a look at the US. Over the past 10 years, particularly over the past 5 or 6, there have been a large portion of states that have suddenly recognized gold and silver as money in legislation and have removed the taxation of it. And in Utah and Texas, they've opened up depositories where people can take their fiat dollars exchange it for gold and silver at the depository, and use that gold and silver in commerce and transactions. States and governments are not doing this just on a whim. They know what the future is. The future is de-dollarization, the end of the unipolar reserve currency system. So those who have the foresight are preparing for it, and they're doing it not with cryptocurrencies or any other thing. They're doing it with gold and silver because they recognize historically for 5,000 years, this is money. This is eventually reverting back to the mean. This is where money is going to be, and it's going to be the one thing that really helps certain regions of the country, or in the East, the multipolar world, to be able to withstand the collapse of the devaluing dollar and what happens when the dollar is no longer the reserve currency.
Exactly. Another point worth making is very clear evidence of where obviously US treasuries were the reserve asset. We're now seeing very clear evidence of a move away from that, with countries dumping US treasuries and buying gold and saying gold's the reserve asset. It doesn't mean it in totality, but it's another development that you have to take into consideration. So at the end of the day, there are clear indicators. The Chinese came out and somebody made a very kind of pointed but very low-key statement that gold would be an important part of the future financial system, and nothing else was said about it. And that's just a very subtle way of saying, well, from our perspective, that's the case. Now, it remains to be seen precisely how that composition works. But what we do know is the fiat monetary system financialization has failed. It had failed by 2008. And it's not succeeded in remedying any of the problems associated with it. It's failed even more, and it has to end. So something will have to replace it, whatever that is. There won't be a need for a world reserve currency in the future, as we said, because it becomes irrelevant. So, as with all these things, you have to be balanced and measured in how we relate to this. And at the end of the day, as I've said, but I want to make the point again, the price of gold in dollar terms, for me, is irrelevant. What matters is what happens to gold when it reflects the new reality, when asset prices are what they should be. And can I then have purchasing power with real money to go and buy assets in the new world in terms of financially the case? That's what matters. And you can arguably apply that also to silver. Although, I mean, there is a lot of speculation, and it is speculation, that physical silver will have a sort of life of its own in a different way, because the demand for silver will increase. And in the future, whatever the future is, and I don't put a time frame on that, because of physical demand, then in maybe long after gold is priced where the belief is it should be, based on the new world, then silver will be different, because as silver physical supply diminishes, then silver will have to be repriced like any commodity. If there's a shortage, whether it's a natural shortage, or in the case of oil, they throttle oil production to support the price or hike the price, that is something that may happen. No one knows what that means. No one knows what that could mean in the future. And as I say, I'm never going to speculate on the price, because for me it's disingenuous. I mean, I could come out with all sorts of figures. I've heard all sorts of figures. I've had conversations with people over the last decade about this, with all sorts of ideas as to what it could be in the future. Well, yes, it could be, but equally it might not be. But at the end of the day, as long as the price reflects where it should be, and you can purchase assets with it, then for me, I'll be very happy. And that's just a personal opinion. And as I keep stressing, it's not investment advice.
Absolutely. Anyway, Paul, I think we covered pretty much everything we wanted to in this podcast. Obviously, in the future, we'll talk more on gold and silver, especially as it relates to more geopolitical events. As always, Paul, thank you for being a part of this podcast.
And likewise, thanks, Kenny. Yes, this isn't the last podcast. We just wanted to put some groundwork in place, and we'll discuss things in more detail going forward and more specific developments associated with it. But you have to start somewhere, and I think you need to put the foundations in place to do that. And I feel we've done that today. So again, thanks, Ken, as well. And we obviously look forward to catching up with you again to discuss something else that we think is of huge importance. So I'll say goodbye.
And to everybody here, I want to thank you as always for being a part of this community. And don't forget to subscribe, comment, like, share this, and we will talk to you very soon with the next one.